Today, we dive into the most impactful stories shaping our world. From economic shifts in the stock market to inflationary pressures and emerging IPOs, the landscape is constantly changing. Here are today's top 10 stories you need to know. Global supply chain issues continue to pose significant challenges for businesses worldwide, impacting industries from electronics to food production. These disruptions, primarily stemming from the COVID-19 pandemic and rising geopolitical tensions, have strained logistics and delayed shipments. As a result, many companies face soaring operational costs and reduced product availability, which in turn affects consumer demand and market stability. In response, businesses are increasingly exploring alternative sourcing strategies and diversifying their supply chains to mitigate these risks. The situation remains dynamic, with ongoing negotiations aimed at resolving trade disputes and enhancing logistics efficiency. Addressing these supply chain challenges is crucial for the global economy's recovery. Looking ahead, companies that prioritize resilience and adaptability in their supply chains will be better positioned to thrive in an unpredictable market landscape. Emerging markets are demonstrating remarkable resilience amid a backdrop of global economic uncertainties. Despite facing persistent challenges such as inflation and currency fluctuations, countries like India, Brazil, and Vietnam have exhibited strong growth potential. Analysts emphasize that structural reforms, including regulatory improvements and investment in key sectors like technology and infrastructure, are crucial for sustaining this momentum. Such reforms not only attract foreign investment, but also foster domestic innovation. As global investors seek diversification, emerging markets appear increasingly attractive, offering opportunities for substantial returns. Additionally, the rising focus on sustainable development and green technologies is reshaping investment strategies in these regions. As the global economic landscape continues to evolve, emerging markets are poised to play a pivotal role in driving future growth, particularly in sectors that prioritize sustainability and resilience. The next few years could see these markets leading the charge toward a more balanced global economy. Global economic indicators are presenting a mixed picture as recovery efforts progress worldwide. Some regions, particularly in Asia and North America, report positive growth driven by robust consumer spending and technological advancements. However, others, especially in Europe and parts of Africa, are grappling with persistent high inflation and ongoing supply chain disruptions. This disparity complicates the global economic landscape and presents significant challenges for policymakers tasked with balancing growth and stability. Analysts emphasize that international cooperation is crucial to tackle these issues effectively. The ongoing recovery from the pandemic remains uneven, with sectors like travel and hospitality lagging behind. As countries adopt diverse strategies to stimulate their economies, the international community must closely monitor these developments. The coming months will be pivotal in shaping global trade and investment dynamics, particularly as nations prepare for potential shifts in monetary policy and consumer behavior. Investor sentiment remains cautious as market shifts continue to unfold, particularly in the technology sector. The recent volatility in tech stocks, exacerbated by rising inflation, has caused many investors to reassess their positions. Major tech companies have been grappling with disappointing post-IPO performance, which has heightened concerns about future profitability. As a result, trading volumes have remained lower than average, reflecting a wait-and-see approach among traders seeking stability before making significant moves. This uncertainty is further compounded by fluctuating economic indicators, including interest rates and employment figures, alongside geopolitical tensions that have raised red flags for potential market disruptions. Analysts emphasize that maintaining a diversified portfolio is crucial for navigating these turbulent times, helping investors mitigate risks associated with market unpredictability. As the landscape continues to evolve, investors must remain vigilant and adaptable, ready to seize emerging opportunities while effectively managing potential risks. With earnings reports on the horizon, market participants will closely watch for signs of recovery or further instability. Despite positive signs in certain sectors, the overall economic outlook faces significant headwinds due to rising inflation and fluctuating consumer confidence. Inflation reached 4.1% in May, a level that has raised alarms among economic advisors who worry that sustained inflation could stifle growth. Historically, inflationary pressures have led to tighter monetary policies, which could further dampen consumer spending. Businesses are now bracing for potential impacts, with many reevaluating their pricing strategies and supply chains. The Federal Reserve's response to these economic pressures will be critical, as interest rate adjustments can either stimulate or hinder economic activity. Companies are adapting by focusing on innovation and optimizing operations to navigate this challenging landscape. Analysts emphasize that maintaining a careful balance between growth initiatives and cost management will be essential for companies aiming to thrive. As the economy progresses, the ability of businesses to adapt to these changing conditions will determine whether consumer confidence can be restored in the coming months. Driving prices upward as fears mount that any conflicts could hinder oil exports and disrupt the delicate balance of supply and demand. This increase in oil prices could have wide-reaching implications for the global economy, particularly as countries grapple with already high inflation rates and the rising cost of living. Higher oil prices can lead to increased transportation and production costs, which may be passed on to consumers, further straining household budgets. Analysts are closely monitoring the situation, forecasting that prolonged instability could lead to sustained higher prices. In the coming weeks, the market will likely react to developments, which may influence energy policies and international relations. In the latest developments on Wall Street, several companies received notable upgrades from analysts, signaling positive sentiment in the market. IBM, Target, and Synopsys were among those upgraded, reflecting increased confidence in their future performance. IBM's upgrade to overweight from neutral is particularly significant, with analysts citing a stronger outlook for its software business in the second half of 2026. This shift comes as IBM focuses on cloud computing and artificial intelligence, sectors that have shown robust growth potential. Target's upward revision highlights improved execution under new management as the retailer adapts to current market conditions and consumer preferences. These upgrades can often lead to increased stock prices as investors seek to capitalize on positive analyst sentiment. The ripple effect of these upgrades may also influence other stocks within the same sector, potentially leading to a broader market rally. As investors respond to these changes, the overall market sentiment appears more optimistic, suggesting that the recent earnings upgrades could pave the way for sustained growth in the coming months. The IPO market is set to see renewed activity, with Asta Spintex Limited planning to launch its initial public offering on June 29, 2026. The company aims to raise 170 crore to support its growth strategy, including the acquisition of Falcon Yarns Private Limited. This move marks a significant step for Asta Spintex, which specializes in manufacturing cotton yarns and has been expanding its footprint in the textile industry. Historically, the IPO market has faced challenges due to economic fluctuations and investor hesitance, but this upcoming offering signals a potential turnaround. Analysts suggest that Asta Spintex's IPO could serve as a bellwether for other companies contemplating public offerings, particularly in the manufacturing sector. A successful launch could instill confidence in investors, indicating a renewed appetite for equity investments. Furthermore, it may encourage other firms to expedite their IPO plans, contributing to a more vibrant market. As such, the reception of this offering will be pivotal, potentially setting the tone for the broader IPO landscape in the coming months. The performance of Asta Spintex IPO will be closely monitored for its implications on future listings. The U.S. Federal Reserve is grappling with rising inflation rates as new data reveals a significant uptick. In May, the core inflation rate reached 3.4%, the highest level in nearly 3 years, prompting discussions about potential interest rate hikes by the end of the year. This rise in inflation, primarily driven by increased consumer demand, labor shortages, and ongoing supply chain disruptions, has surpassed analysts' expectations and poses challenges for economic stability. Historically, inflation rates have fluctuated, but the current surge is particularly concerning as it follows a period of low inflation. The Fed's decision-making process is under scrutiny, especially following President Trump's calls for rate cuts, which complicates their mandate to foster maximum employment while stabilizing prices. As inflation continues to rise, the central bank's approach will be crucial in managing economic growth while keeping prices in check. Market analysts are concerned about the implications of these inflationary pressures on consumer spending and investment, which could slow economic recovery. With rising costs affecting households, the Fed's future actions will be pivotal in shaping the economic landscape. Investors should prepare for potential shifts in monetary policy as the Fed seeks to balance growth with inflation control in the coming months. In a surprising twist, tech stocks showed signs of recovery on June 28, 2026, as the market appeared to stabilize after a prolonged tech sell-off. The S&P 500 and Nasdaq, which had been on a downward spiral, managed to rise by 0.3% as investor sentiment shifted. This uptick comes amid reports that OpenAI is considering delaying its IPO due to market uncertainty. The tech industry has faced significant headwinds, particularly following the disappointing post-IPO performance of SpaceX, whose stock has plummeted over 30% in the past week. This decline has sent shockwaves through the sector, prompting investors to reassess their portfolios. The ongoing volatility has raised concerns among investors, leading to cautious trading strategies that prioritize stability over risk. As the market looks to stabilize, analysts are closely monitoring the performance of major tech players like Apple and Microsoft and their impact on the broader economy. The recovery in tech stocks may indicate a tentative shift in market confidence, but uncertainty still looms, especially with inflationary pressures and interest rate fluctuations. The coming weeks will be crucial as investors weigh the potential impacts of upcoming earnings reports and economic indicators on market performance. A strong earnings season could further bolster this rebound, while disappointing results may reignite fears of a prolonged downturn. Thank you for joining us today. Which story shocked you the most? Let us know in the comments, and don't forget to like and subscribe for more updates.